Hidden up thrust, Google stock using a 60-minute time frame. And here is our hidden up thrust at A. It pops, you just see it pops its head above the local bars before reversing to close weak with a slight increase in volume over the previous local bars. Try to think in multiple time frames. We have this here, here, here. So we have 3 highs. On a 5-minute chart, 12 bars, so 12, 24, 36, 48. So that's 60 bars. And on this bar A, think about this. We'd come up, we'd test, come down, test, come back, and then we come up, we just up thrust, and then we come back down to close under these lows. So this is a good hidden up thrust. So when we apply a little structure and further analysis, the chart opens up. Amazing how a little bit of structure can do this. What do we note? Well, we slam down, breaking through support here, with a widespread increase in volume, boom, all the way down to B. What do we note about B? Well, ultra high volume, we close well off the low. So we could say this bar is a little climactic. It's huge volume, closes well off the lows. However, this is supply coming into the market. From bar B, we would expect some form of rally. So from B, where would be the natural place for market to test? Here. What was support should now be resistance. So this bar here is hinting towards a rally. I mean, this is clear selling in this market. This just doesn't disappear. However, bar B hints towards a rally. Then as we rally back up to test this area, volume declines. Then boom, bar C, we gap up. You can draw in the tau with very high volume. Yet structure holds. This resistance is holding, and it holds very, very well. Why? Well, because with all volume, we're unable to break to the upside, and look at the close. It is way off the highs. Only selling can do that. So selling has emerged at resistance where it should, and that's important data. Then we try to rally back up. Very low volume, no demand. And then what happens at D? Little spike in volume, and we close way off the highs again. Okay, more negativity at resistance. And 2 bars later, boom, what's this? No demand. We have a small narrow up bar at resistance in an area of supply. We have negativity here, and this big widespread bar closing here, which validates is our area of supply. So no demand at resistance, bang, instantly short the no demand. However, bar A pops its head above this local price action to reverse and close weak under these lows, taking out 1, 2, 3, 4 closes. That's 60, that's 240 minutes worth of price action we close under. So this bar A, achieves a great deal. It wipes out 3 previous lows and the 4 previous closes. It achieves something. Okay, but primarily what's important about this hidden up thrust is that it occurs after no demand. Now think how powerful that combination is. This example was used as it illustrates the use of structure and volume. When combined, it helps us to pull the trigger to initiate a trade. Okay, we're using the volume and the price action, the no demand at structure. Then we pop ahead above to reverse and close weak with a slight pop in volume, closing under all this action. We can instantly short bar A. Although bar A didn't massively up thrust the local highs. It doesn't have to, because we can tell via the close under this action, under the previous bars, that this bar is indeed very weak. The spread has increased. Again, importantly, what is this? It's more negativity at resistance after C, after D. We know they're selling at this level, followed by a no demand and then our hidden up thrust. A no demand bar before a hidden up thrust at resistance is a choice setup. It has excellent context. This combination does occur fairly frequently, usually without structure, and should be included in one's playbook. I mean, here, this is lovely that we have this kind of structure to lean against. So we may come down with spreads increasing, good price action, increasing volume, selling of good quality. It's positive. Then as we try to rally, we might be rallying in the middle of nowhere. There may be no areas of structure. Then we might hold a local level, which is why a local level support, or resistance in this case, is very handy. And if we can see, we print a no demand bar like this, followed by a bar like this. This is a very good hidden reversal. Here we're using local resistance. Here we're using major resistance. Okay. Just bear that in mind. I can see a question here. Is it better to have a clear up thrust with more spread? Oh, okay. Well, I understand what you're saying. First of all, we need to use context. And this bar, as we've previously stated, closes under 3 lows and 4 closes. That's 240 minutes worth of trading. Okay, it achieves a great deal. Now, if we printed a bar like this, yes, this would add an additional layer of weakness. Why? Well, because this action here induces a bull trap. You know, this would act, you know, breakout traders would be thinking this is going north because we're rallying past. Like, breakout traders would buy here. Okay, but as we reverse to close weak back under here, we would know that this would be a reversal type of action, and all those bulls would be trapped, adding liquidity to the move down. But if we had a wider tail like this and we come and close here, this doesn't achieve as much as this bar here, our hidden up thrust bar. Why? Because we close under all of this action here. Here we reject prices and we close under, but it doesn't achieve as much as bar A. Okay, so always try to think, what is the bar achieving? So if we do have a wider tail like this and we close like this, I prefer to short A than this potential bar, say here at Z. And of course, if we pushed up like this and then closed like this, of course this would be, say bar Y would be, doesn't have high volume. Well, because we know that high volume bars like to be tested. Okay, so bar A here is lovely, especially in context after no demand at resistance with evidence of selling in the background. Good question.